Hi everyone, Simon Barwick here from McLean, Delmo, Bentleys Financial Services. Hope you're all well. I'm giving you an update today on the federal budget, which was delivered on Tuesday by Jim Chalmers. It's the first budget that Labor have delivered in over a decade. It was quite a conservative budget when you look at all the announcements, but I think it's important to consider the environment that the budget was delivered in. When we look at the current situation we're in, we are looking at a high inflationary environment. There's global instability. Families are facing an increased cost of living, and interest rates are rising. When we look at the state of the economy, Treasury have forecasted that we're looking at a 36.9 billion cash deficit going forward. So this was actually a lot better than initially forecast. Economic growth is is predicted to slow over the next couple of years. We're looking at a decrease from 3.25% down to 1.5% over the next couple of financial years. Unemployment, which is at historic lows at the moment, is forecast to continue to stay in that area or that region. And wage growth is pretty much non-existent when we consider increasing interest rates and increasing inflation. Effectively, it is going backwards. Inflation is really the buzzword at the moment, as a significant challenge. It is forecast to go to 7.75% by the end of 2022. All right, I'll look now at some of the budget highlights, and I've broken these down into superannuation, social security, welfare, housing, and taxation. So if we consider superannuation first, the government hasn't really made any huge announcements in this area. They have, however, announced that they will be amending the current rules for the downsizer contribution, and they will be decreasing the age of eligibility from age 60 to age 55, making it available to more people and potentially freeing up housing stock. If we consider next the social security announcements, there's three main areas: work bonus, asset test, and the Commonwealth Seniors Healthcare Card. If we look at the work bonus, this is really allowing pensioners to increase the amount that they can earn before their pension would otherwise be affected. This is a strategy to try and get more those on a pension back into the workforce and assist with some of those current resourcing constraints that we are finding. Next one is regarding the asset test exemption. That's really a way, once again, to try and free up some of the housing market. This is an exemption that will allow anyone that does sell a house to retain those proceeds for 2 years and not have them assessed under an assets test if those funds are then being used for housing renovations or building further properties. In regards to the Commonwealth Seniors Healthcare Card, the thresholds have been raised up to $90,000 for an individual and $144,000 for a couple. So that was really increasing the level of eligibility. If we consider the welfare announcements, that once again, there's three areas that I'll cover in regards to medication, childcare, and paid parental leave. If we look at the medication under the PBS, the cost of scripts is decreasing from $42.50 down to $30, which is fantastic, and really used to is addressing some of those cost of living concerns, albeit small. Childcare, looking at a 90% ability to claim on childcare costs up to a combined income of $540,000. So this measure's really been put in place to drive, further workforce participation by women. Paid parental leave, the government is looking to increase this to 26 weeks. Won't come in until 2026, but once again, it's a way to increase the flexibility and around this initiative and get either parent back into the workforce or to take the leave as required. Housing, you probably heard that the government is now looking to increase the number of houses constructed in Australia. They have a target, ambitious, of 1 million houses to be built over a 5-year period, and they're looking to bring industry, investors, and unions together to achieve this target. It will be interesting to see if they can achieve it, considering the current resource and material constraints that we're already facing. From a taxation perspective, no real announcements on this front, but the stage 3 tax cuts are a political hot potato at the moment. They were put forward by the previous government. They were supported by the current government, and it'll be fascinating to see how the current government navigates the politics of not breaking political promises with trying to move forward on budget repair. So yeah, it will be fascinating to see how that happens. Overall, the government's is in a very challenging position, trying to not stimulate the economy, worsen inflation, and deal with the debt that we currently face. If you do have any questions regarding the budget and your specific situation, please do speak to your advisor. Thanks.